Traditional markets gave up their gains from yesterday. Bitcoin is down a little bit, bouncing around just under 30,000. So let's take a look at what's going on, what is possible for the weekend and next week. We've got some big events coming up next week, but right now the market's just closed almost an hour ago. The Dow Jones was down 1%. S&P down 1.6. The NASDAQ took the biggest hit, down 2.7, but it was the biggest winner yesterday. And in the news today are more layoffs, hiring freezes, things like that. Elon Musk said that he is going to cut about 10% of his workforce. But of course, at the same time, he told everybody you need to come back to work in person or go find another job. So this could be all part of the attrition scheme that or technique that he's trying to use to pare down the workforce. And then, of course, we've seen a couple of crypto firms, Coinbase, and there's reportedly one in Dubai or United Arab Emirates that is laying off mega staff. Coinbase is freezing hiring and rejecting or terminating potential employment engagements that it has entered into with potential employees. So pretty interesting times right now. And, obviously with the trade volume down, the fees are down, and they do not have enough for employees to do. And a lot of companies were on a hiring spree. That's what happens in tech, right? You grow fast, you break things, you just hire. Capital's pouring in, so you can spend it on just hiring, so you can grow. And then at some point, you've got to be profitable. Or if market conditions change, you have to react. And right now, with the state of cryptocurrency, things are changing rapidly. So the other news for next week is going to be the Fed meeting, or not Fed meeting, but the CPI print ahead of the Fed meeting. So next Friday, the CPI print comes out. The Fed meets the following week right behind that. So all eyes are going to be on the inflation print. And there are some expectations that inflation has peaked. And some experts, analysts, economists are thinking that inflation, has somewhat peaked, and that the new inflation print next week is going to come back in just under where it was at its peak at 8.5. I don't know what they're looking at in terms of measuring inflation, but I think you and I both know nothing has come down. Everything is continuing to go up. So I don't know how they're going to have any kind of an inflation print this, last month less than the month before. That just makes zero sense because no prices have come down. They're just going up. Costs are increasing continually. So I'm not sure we're going to see that. But anyways, the Fed's Mester, Cleveland's Fed Chair Mester, says that inflation hasn't peaked and multiple half-point interest rates are needed. So at least we have one person from the Fed who's saying inflation has not peaked. And of course, a couple of other Fed board members have said that they're going to continue to battle inflation and do what is necessary, whatever it takes to battle inflation. Of course, the White House is saying that inflation is number one. They're going to continue to battle that. And with a strong jobs report beating expectations today, that gives the Fed plenty of runway to keep strong on policy, to keep raising rates, and to roll off that balance sheet and try to land the plane softly here on inflation and on the economy. So let's take a look at the charts real quick. This is Bitcoin on the hourly. And as we looked at yesterday, it's unwound this move here. And this whole pattern right here looks like it's setting up for a retest of these lows, potentially over the weekend. And if we go back and kind of look at, if you look at this pattern here and just kind of go back and look at the price action previously in this area right here, it looks a lot like it in terms of the sideways ranging, a little bit of a pop-up, getting ready for that drop, and price kind of being in this area right in here before that drop off. So we could see a retest of the lows this weekend. Of course, there's a lot of leverage trading going on. And a lot of liquidations happening. That's what these big spikes up, big spikes down generally are, just liquidations in this trading range. The real question is, could this all be, and last year, could this all be just a big setup, setting everybody up for a big drop this year so there could be a big low range accumulation again? So before we get into that conversation, let's take a look at traditional markets, because basically what they did today was unwind yesterday's gains pretty much. generally still a little bit above where it finished yesterday. So it didn't completely unwind it, but again, this little move here, markets are setting up for a little bit of a drop next week ahead of the inflation read and the Fed's response to that. So you'll probably, could probably expect a little bit more downside next week, maybe midway down through this bear market rally that we had going on here the last week or so. Ahead of that, and if the inflation print comes out higher than expected, then you can expect some considerable downside in the markets. If the inflation print comes out lower than expected, where the narrative is inflation, is either peaked or is somewhat easing, can't imagine how they can do that, but they can manipulate the numbers, and we'll see what they decide to do. Then markets would likely bounce a little bit ahead of the Fed. Then the Fed's going to come out, raise rates, and talk about their target 2% inflation. And if inflation's reading in the 8% range and the Fed's target is 2%, what needs to happen and for how long to get that back down to 2%? That's what the markets will digest next ahead of that. So that's kind of what I'm looking at and expecting from the Fed. So what am I talking about being set up? So, last year it looked like, all indications were that this $29,000 level was going to break, and Bitcoin was going to go down and check some of those previous all-time high levels and check some of these previous support levels, but it didn't. Price got jacked back up into this range, jacked back up again to this range. So, the accumulation happens along this area here. This is where investors, whales, everybody's accumulating in this area to drive the price up, to distribute along these tops. The price drops back down. There's accumulation here to drive price back up. Accumulation here, drive price back up. And that's kind of what happens as price kind of bounces around. Whales will accumulate, jack it up, distribute. So these are mini accumulations with distributions along the way here, working its way down. Same thing here, mini accumulation to distribute as we work our way down. So what's happening is a lot of people over here that were, bearish, me included, thinking this was going to go down further, were fooled and are now potentially getting comfortable thinking that price will not break that 29,000 level because it didn't last year. So what would be the meanest, worst thing that you could possibly do to shake people out, break their confidence here, and go ahead and check some of these lower levels? First stop, 24,000. Next stop, 20,000. Next stop below that, $10,000 to $12,000. So that would be the perfect shakeout scenario for whales and institutions and large investors to once again shake out the market, to reaccumulate down here, and then do it all over again. And that's what we've seen cycle after cycle. Accumulate, drive price up, shake everybody out with these big bounces all the way down, just wear them out over a long period of time, hit that final capitulation to the bottom, and then start the whole process over again, accumulation all through this range, and shoot it back up. So this could all just be a giant setup, this whole region here, just setting the table to once again start the whole cycle over. And we've seen it several times. There's been, several bull market cycles since Bitcoin's existence, starting back into 2011 when Bitcoin was created, and then 2013, 2014. So let's go all the way back. This is the first one right here, 2011. And then you have 2013, 2014, you have right in this area. And then you get back into your 2017, 2018. And then of course, what we just went through here in 2020, 2021 timeframe, setting the table for that big drop. So this will be interesting to see. My thoughts were that there was going to be enough buying support that price would not break these levels on a continuing basis. So I don't know. We shall see. We do know that Bitcoin can go to extreme levels given extreme situations in the economy. So in a macro bear market, which Bitcoin has never existed in a macroeconomic bear market, it's had its own little bear markets within the macro bull market that we've been in since 2008-9 with quantitative easing, with zero interest rate environment. That's what Bitcoin was created in. That's what it's existed in. So the question is, what is it going to look like in the opposite macroeconomic environment? Because it's a risk asset just like everything else. And you see what's happening to risk assets. They are unwinding and continuing to rollover for lower levels, repricing. The difference is the traditional stocks have underlying businesses that have income and employees and things like that, whereas these are speculative assets that have no underlying business. Some of them, there's no business model underlying Bitcoin. There is adoption, there is some use case, and it is a different kind of an asset, being, more like a digital property versus some other coins like Ethereum that has, projects that are operating on the system, and it's got the merge coming up or the fork or whatever is happening with Ethereum coming up. That there's a lot of excitement about that going to proof of stake. So maybe that drives the price a little bit ahead of that. So we'll just have to wait and see. Otherwise, Ethereum is hanging on a cliff, waiting to test some of these lower levels, get back down to that $600-700 range potentially as the last line of support for a broader accumulation. Avalanche, we took a look at this the other day. Avalanche could potentially get back down to, the next stop around that $10-12 range, and then ultimately maybe back down to, $4, $5, $6. Solana, where could Solana get back to? Well, it started right here in the $1 range. Right now it's got, quite a bit of support in this $40 range. Next level would be $17 range, then $7, $8 range, then $3 to $4 range. And then, obviously if things were really bad, down to that $1 level again. I'm not saying it's going to get there, but it could. There is the potential for that, but it's kind of, let's see where it's at right now. Most altcoins in the bear market dropped 90% to 95%. So that would put Solana at 95%, around $14, $15. So the question is, if that happens, will people give up, and, will it go back down to the, $1, $2 levels where it was basically, January of 2021. So price was at that December, January level. It was at that dollar level back in that time frame. So, it was only about a year and a half ago that it was at that level. So to think that it can't go back there, you have to, that's your risk, right? That's your downside, that it could go back there. And obviously it probably won't stay there as long as the project continues and, continues to do well. Cardano, we've seen that unwind, approaching that level as well. And what does 95% look like at Cardano? 10 cents, somewhere around there. So a lot of these altcoins, or that was Matic, I'm sorry, Cardano. If you look at Cardano here, that could drop down. 95% puts Cardano around 15 cents. That was Matic I was talking about, that 95% puts it around 7 cents. Ethereum, let's look at Ethereum. If Ethereum dropped 95%, which it has done in the past, 95%, puts Ethereum right around, 95% puts it around $237. 90% puts it around $450. So will it get that far? It has in the past, but that doesn't mean it will now. Even Bitcoin drops 85% typically in the past, 75 to 85. We looked at this the other day. 75% puts Bitcoin at 17.5. 80% puts Bitcoin at 13,000 and change. 85%, which it's done several times in the past, puts it at about $10,300. So it has done it in the past. So to think that it can't do it again is poor risk management. It went to 69. So to think it can't get back there again is poor investment management. Poor risk management is to think that it can't get, below a certain level, because we saw back in March 2020, it got all the way down to $3,800, $69 from 20,000, and then 13, 14,000. It was on its way back up here when everything hit. So if risk assets, really start to capitulate, really start to crash, Bitcoin, crypto, it's all going to be right behind it. And those are some of the lows that price can get to. And right now we are just in a global macroeconomic risk-off environment. And, to try to think that the price is somehow going to, bounce here and go back and set a new all-time high or anything like that in this current environment is just not a reasonable, it's just not reasonable to expect that. There is no catalyst. There's no liquidity out there that can drive these markets back to new all-time highs, given the current environment that we're in right now. The only way that would happen would be if next even by the end of the year will be to get inflation back down to 2% by the end of the year, and the Fed can completely stop what they're doing and or reverse course. Even if we have a significant, continued downside here, the Fed just cannot stop what it's doing. It has to get inflation under control, and to expect inflation to go from 8% to 2% in the next 6 months, given the current labor market environment, the cost of fuel, the war in Ukraine, putting pressure on food and energy prices, all the other things that are going on right now, supply chain constraints that are going to open up. So some of that will get relieved and alleviated. Housing, where it's at right now, it's going to take housing 6 months. I mean, if interest rates stay below 6%, it's going to take housing a little while to continue to correct. It's already starting in some markets, but it's going to take time, and it always takes time. So to expect any kind of a recovery, a bounce here, and then to create a new all-time high in any of these markets, including crypto, it's just not a reasonable contemplation right now. It just doesn't make any sense. It's not rational. There's just not enough capital out there. The environment's not the same. Everything is still going backwards right now, and we're in the middle of the year right now in June. So, but is it possible? Sure, anything's possible. If inflation, like I said, all of a sudden just completely reversed and gets to the Fed's target of 2%, and they can stop what they're doing and reverse course if need be, then yeah, you can be back off to the races. But right now, let's look at traditional markets, bear markets, and what they look like. And this was a cataclysmic black swan event March of last year. So that's not what a bear market looks like. What a typical unwinding of a bear market looks like was 2008-9, prior to the great financial crisis. So the bear market started. It takes several months. We're in the same kind of position here that we were back then in the market. So this was 2008, before the big final capitulation, when the banks started failing and all that. This is when everything started happening and the economy started unwinding. We're kind of looking at the same thing. And to put a little perspective on this is the daily. Let's go ahead and go to the weekly. This is the weekly chart of that same situation right in here. Prior to that, this was your 2000 bear market time frame. And these things last a while. The 2000s, it was before price got back to where it was before the crash. I mean, that took basically 355 weeks, 2,485 days. So the bear market from peak to get back to even again in 2008 and 9, it started in 2007, and that took basically, let's see right here, 304 weeks, 2,086 days, 297 weeks, 2,079, 2,080 days to get back to even. So that's weeks. So, that's several years, right? When you look at in terms of, the days and everything, I mean, 52 weeks in a year, you're talking about 300 weeks, that's 6 years, right? So from 2007 until 2013, 2014, that's 6-7 years it took the market to get back, with quantitative easing, with low interest rates, to get back to even after, of course, that was a big issue. That was a lot of banks failing, and there was a lot of systemic risks globally, in the economy right then. So, the only thing we've had close to that was right here in March of 2020. And then there was so much liquidity. I mean, this entire amount of quantitative easing was done right here in a matter of about a year. So, that's kind of what the bear market scenarios can look like. And is that going to be the case here? Again, this is all still a product of the anomaly of the pandemic, putting pressures on supply chains, bottlenecks, creating labor issues, things like that. But the labor markets have fundamentally changed. So wages are not going to come back down. They're going to be sticky. Those things we know are going to be sticky. Unless interest rates in the mortgage markets get up above 6%, we're going to have some stickiness in, house pricing and construction, inflation, things like that. It's going to take 6 months, to potentially a year for that to kind of unwind and the market to shift and really fundamentally change there throughout the rest of the year. And as far as retail goods and, other types of food products and things like that, we should see some of those prices hopefully start to come back down, as we get into next year. But right now, there just doesn't seem to be any catalyst that we're going to see relief on that front anytime soon, especially going into the end of the year. And especially going into the summer when prices are typically up on food, fuel, transportation, travel, things like that in the summer months. And then you have the holiday season, things like that. So interesting times. Those are the things I'm looking at. We have a big week next week. I do expect markets to be down a little bit ahead of the inflation and consumer confidence based on those numbers. And I'll do some stuff next week on that. We can expect markets to react to that. And then the Fed is going to react to all that information. So big week ahead, big 2 weeks ahead for the markets with everything that's coming out. We have some earnings coming out as well. So we'll just have to keep an eye on those things. So these are the things I am looking at. And again, all this is positive. Is we need a reset, recalibration. And as markets correct, they will. And this will be the best correction that we've had in terms of knowing when the bottom's going to come in, because we know when that bottom is going to come in. It's going to come in when inflation recedes and secedes, when inflation turns back and starts dropping significantly and rapidly, and the Fed can slow down and stop. That's when markets are going to rebound. That's where we're going to see some nice bounces, and you'll get some big bounces along the way as well. And then cryptos, obviously the altcoins, several of the altcoins are popping off here and there, but the major altcoins, Bitcoin, Ethereum, are going to follow traditional markets and the effects and the impacts of inflation in the Fed. So those are the things I'm looking at, and I will see you on the next video.